Good afternoon, guys. Welcome to Daily Market Review. Today's date is October 7. So, today's Monday. We had a very um, choppy, I would say, morning session, but during the PM session, apparently, I was not watching at all. I'm just gonna look at it right now with y'all. We had a sell off. Um, it was a heavy sell-off. In fact, 200 so yeah, 215 handles. But let's take a look at what happened intraday during New York session. So first and foremost, the overnight session here, it gapped up initially. Where's the gap? Hold on, here. Oh, it gapped down. 1 second. Oh yeah. It gapped up, so we have weekly opening gap right here. It's a gap up. It traded above the buy side, basically previous day high, Friday's high. It failed there, but before displacing lower during London session, it basically rebalanced or worked its way around the NWOG and build buy side liquidity. Right now we have equal highs resting above previous day high. We also have equal highs from last week. So initially, I'm on the 1 hourly right now. The reason I'm on the 1 hourly is because actually it has to do with a yes, but it's the same thing with Nasdaq as well. So the reason I'm looking at it on the hourly is because of this PDH. Let me just fix that. Previous day high failure occurred in premium of this big range, which at the time of the live stream, I was not looking at this dealing range. To be honest with you, my main focus was the buy side. But because of where New York opened, I was more leaning towards more the sell side than buy side for the intraday purposes. And the rejection. So we have this old range, buy side range, right? It's the EQ of this range. First things first, and secondly, the inversion fair value gap up there. This one right here, because this one is the one that takes out the buy side, caused this whole dump. The market basically respected it the whole day, and it dumped and took out sell side and Friday's low, which is here. It took it out during the PM session. So we had a range bound thing on the daily time frame from previous day high to previous day low, and that market closed there. So during the live stream today, I made you guys aware of 20,058 sell side was my drawn liquidity from range gap CE and potentially range gap high. It failed at range gap C, couldn't even go up to the open range gap high. But this price action, although it looks like kind of low resistance run here, basically from 10 o'clock or even 9 o'clock to 2 p.m. was choppy, lacked fair value gaps and all that. But I'm going to look at it deeper in a minute. So the reason I went for low resistance, not low resistance, but low hanging fruit objective today was mainly because of the fact that price failed to form an order block here. My thought process during pre-market today before New York opened was this 3 consecutive up close candles on the hourly becoming a bearish order block, which did not happen. Price did not show willingness to go below 8 a.m. essentially candle, but instead it formed that bearish order block later on during the session. So let's take a look at, also I have to mention this inversion fair value gap as well, because it failed this PDRA, this is SIBI, failed that, came all the way up to the CE of the inversion fair value gap. Why I'm looking at this inversion? Because this is the inversion that caused the buy side purge. and it dumped from there. So let's take a look at it on the 1 minute. As you guys can see on the 1 minute, it was very choppy until 2 p.m. But the main thing here was the opening range gap, high, low, and CE key levels for intraday purposes, and then equal highs here, which was taken out also. That's also another key thing. Actually, let me annotate that because I'm going to read that order flow in a second. And then let me clear the inversion fair value gap. So basically, before the dump, before the sell-off, the market worked its way around or inside the opening range gap's lower portion, and then it sold off. So let's read this order flow. So this is equity open. So initially it just wicked up, came down here, formed equal lows, right? And then it manipulated 930 high, basically here, turtle soup that high, and ran the equal lows. Okay, that alone is a trade. If you, I mean, in this case, it was not offering any fair value gaps, but there is a order block here, which is 9:40 p.m. candle. Could have been used as an order block. Not my type of trade. To target equal lows. The reason you could enter here with, or the volume balance, you can also use that. Though the reason you can actually execute this if you wish, I'm not saying you should or you must or anything like that, is because of the fact that the market has a reason to purge sell side, because it just formed equal lows and ran on buy stops. Okay, so it delivered the sell side. Initially it rejected, and in that delivery it formed the first fair value gap of the New York session. Let me annotate that, which was a SIBI, and it traded all the way up to the CE of the first fair value gap of the session and the opening range gap. It rejected there, basically wicked and closed below the CE. Then immediately after, it traded up into the 50% of that wick, and it sold off. With that sell-off, it actually formed a bearish order block on the 1 minute time frame while running on sell stops. So it ran the sell stops here, kind of accumulation. It lacks displacement, so I was personally not interested in this PA. But once it gets above this OB, now you have, or we get, a breaker block. Here's the breaker block. Here's the breaker block and a displacement right here inside the first fair value gap. So it came down to the breaker block, left open range, left breakaway gaps, and it delivered the old equal highs here. So the buy side was purged. Let's clear this chart a little bit now. That's a unicorn setup though. But in that fair value gap, where I'm annotating with the red box, the market lacked a sell side wick here below 1014 candle. So that alone usually acts like a magnet, and it did after buy side was purged. And with that buy side purge, actually I also forgot to mention, market traded up into the opening range gap CE, and bodies were respecting that level as well. Thus you can actually anticipate a pullback into discount or range equilibrium, which it did here. Came all the way down into this fair value gap, which is in discount, offered sell side for this candle. Here's the range. That's the discount. Let me change that color though. Actually, let's do this. Let's do that. Came into discount, offered sell side. It also is the same level with the first fair value gap of the New York session, and it's CE and the open range gap low. It bounced from there, formed some sort of a rally, lacked sell side here, but it formed an order block here. That order block's mean threshold was traded into. That's manipulation. It didn't have to. Came all the way down here, but it did. That's manipulation. So the mean threshold of the OB sent price higher up into the upper range gap CE, and it stalled there. The body is respected the CE, and it sold off. Here it left equal highs, which is ugly. I'm not sure if it took it later on. No, it didn't. Once that rejection occurred at the opening range gap CE, I think that's also a bearish SMT if I'm not mistaken. Let me just check ES real quick. It looks like a bearish SMT, yeah, because ES kind of stayed weak. Then it displaced lower, worked its way around the opening range gap's lower portion and the first presented fair value gap of the New York session. This PA though here is just working its way around the opening range gap lower portion. The reason, or not the reason, but the intention of that accumulation, that kind of accumulation, is basically build liquidity, right? What I mean by that is, so we have this low relatively equal to this low, and this low is relatively equal to this low. So we have a bunch of equal lows left, so here, and then here, and then equal highs here. I'll annotate this one because it's very close proximity. These highs here, then this high is relative to this high, is also equal highs. So it was basically building up liquidity on sell side and buy side all together. Here it ran but some buy stops, accumulated, inverted the fair value gap. Now there is a trap longs here, and market displays lower. But way too choppy. It's too much back and forth. And here before the rally, same deal, relative equal lows, and this candle is trading up into the trap fair value gap here. More or less, it couldn't reach. Let me check the volume balance though. Yeah, there's no volume balance there. Couldn't even reach up there, and it sold off after purging buy side. With that sell off, it attacked the first lows, or the first equal lows, this low and this low, formed a SIBI. Trying to make myself aware of the volume balances as it was gapping too much. So here, after that equal lows got purged, this is basically within the macro. It got purged within the macro, and then market traded up into the first presented fair value gap of the session, also the dealing range, this dealing range EQ, basically premium portion of this SIBI. Then it ran on stops inside the fair value gap. You guys know already that I allow to see this inside fair value gaps, but it has to be a weak reaction, as shown here. It just traded two or three, I would say, ticks above the short-term buy side, and it sold off, formed an order block here. Basically, that turtle soup causes the order block, and that's a very high probability entry because it lacks displacement. You can use the order blocks and its mean threshold. Let's annotate that as well. Couldn't even reach, the market couldn't even reach to its mean threshold. And from there, it sold off, attacked the equal lows, and then all the way down to 20,058, and eventually it attacked the previous day low. Let's read that order flow all the way down to the previous day low though. So turtle soup inside a bearish PD array. Turtle soup causes, I want to check actually if that turtle soup is also SMT divergence. Yeah, it's also SMT, bearish SMT divergence with the ES. So we tested the order block here, sold off, displaced more, caused a huge wick here, and you should always divide these kind of wicks into its quadrants. So the market traded all the way down to the 25% of that, or 75% of that wick. Then it went all the way up. There is a gap here. There's a gap up, so it traded all the way up to that gap up here, tiny little gap up, and it sold off. I think if you miss this move up here, I don't think this is tradable, honestly. I mean, it is tradable, but personally I would not touch it. Then sold off all the way down to the previous day low. This is the last fair value gap that caused the dump. And the rest of the session basically was just consolidation as the market was about to close, because the previous day low got tagged at 3 p.m. precisely. So the last hour ended up being just a manipulation to the upside, to the downside, and just an accumulation. So in that accumulation, it formed equal highs. This high is relatively equal to this, and then there was a sell side here, another sell side purge. This is likely to be SMT. I'll look at it in a minute. Probably SMT over there. Not with that, but there's a larger SMT. Basically, I would say 15-minute SMT divergence, or 5-minute. Yeah, it's 15-minute SMT right there, and that bullish SMT for the last 10 minutes of the market repriced it all the way up to the equal highs. Basically changed the order flow here. This is changing the state of delivery, aka order block, its mean threshold. Market came down to its mean threshold all the way down, and this plays to the upside, formed a breaker block here inside a fair value gap, and delivered equal highs right before market closed. So the PM session was clean. It is clean, but the morning session, if you ended up over trading in this choppy PA, you're doing it wrong, guys. Because the moment you see prices not respecting the PD arrays on both sides, both bearish and bullish, you should not touch it until it starts moving. How do you know it starts moving? It's a displacement here, and then the fair value gap is being respected, and overall the market has to be, not has to be, but should be bearish, because it attacked the PDH already, and the open range gap CE was respected, and it couldn't even trade into the upper portion of the open range gap. So now we had a weak candle, or a weak close, on the daily, on the 4-hourly, on the hourly, basically on all time frames. And going into tomorrow, this is what I'm expecting. Let me go to the hourly, or maybe like 4-hourly. So I'm gonna say this one more time. Probably some of you guys will get mad at me, but this is what I want to see, essentially. Oh, white, okay. So this is the 4-hourly time frame. 4-hourly time frame, or higher time frame in general, has a lot of unfinished business at the sell side of the curve. Okay, and the order flow itself is still bearish. Okay, there's no shift here. There's no breaker block here. Okay, it has not formed it. Thus, the bias has to be bearish going into tomorrow and Wednesday. So NQ right now has unfinished business at 19,818. Okay, that sell side has to be traded into at this point. And then there is September 19th opening range gap low, should act as a drawn liquidity as well. I think that's a real liquidity void. And then we have equal lows for the market maker style model on the 4-hourly at 19,528. So tomorrow, 818 likely to get traded into, and if we see a displacement to the downside, it's gonna go all the way down to the 635s. It might stall here and leave the equal lows for later for CPI or Wednesday. So be careful with that as well. Do not force short trades all the way down to the equal lows intraday. Okay, it doesn't have to trade within that day, because we have FOMC, we have CPI. The market will want to leave some sort of liquidity. So if, for example, it could actually trade down here, down into the September Thursday's open range gap low, then consolidate here, maybe pump one more time and run it. In that case, these lows will end up being more equal lows, so generating more lows to run on it later as a low resistance run. So that being said, I think we are still in the market maker sell model. This kind of looks like it's about to get into second stage redistribution though. Thus I want to see displacement and low resistance liquidity run. It also aligns with the fact that we have CPI number coming out later this week, which always causes low resistance run. So yeah, I hope you guys did not blow but like burn or eat capital today, because which was not worth it in my opinion. Other than that, I think this is all I'm going to say. Oh, also the 4-hourly order block has formed, and it was confirmed with the Monday's close. So we have a bearish order block on the 4-hourly. Price shouldn't go above it for a clean sell side delivery. So yeah, I think that's all I'm going to say for today. I'll be live streaming tomorrow. I'll be live at 9:15, so I'll talk to you guys tomorrow in the morning. And until then, stay safe, have a great rest of the day, and I hope you guys find this insightful. Have a good one, guys.